Nvidia stock got absolutely roasted today, along with many other semiconductor plays. QQQ right along with it. We need to talk about it. I am Dr. Stock, Doctor of Education, and I had a breakfast joke lined up for you, but the punchline was waffle. All right, guys, let's get right into the charts. QQQ, IWM, Russell 2000 stocks, I'll cover those. Nvidia, we'll spend a decent time talking about that. Tesla, Sofi, and TMF. So a lot of things I've been tracking. If you want to see all of it, link for the Patreon's down in the description. You can even see my buys and sells. Here's QQQ. I was ready for it with my short hedges. Worked out really well. Could we see a further sell from here? Well, after such a strong sell, almost 3%, most likely we are going to take a bit of a bounce tomorrow. We'll see if that happens. Now, there's a lot to see here. Let me help you unpack it. We had critical resistance. We peekabooed up above that, then got an engulfing candle, followed by some long top wicks. So even though the price recovered a little bit, we still had the selling pressure coming in. And then we had one more day in there, Tuesday of this week. Couldn't really hang on because of today, led by Nvidia with semiconductors. The market just got trounced. I think something like $500 billion or something was lost from market cap through the magnificent 7 companies that are out there. So big old sell today, strong volume as well. So that's a confirmed move down. When you see that, meaning that we could possibly see a further sell down to here, which is where we find the 50-day EMA and SMA, which is this red and blue line, the light blue line that are here. So we could potentially come down to 472 all the way down to about 469 from where we're at right now. Now, is there a bounce tomorrow? Potentially, after a 3% sell-off in an index like the Nasdaq 100, which is what the QQQ tracks, the ETF tracks. That can most definitely happen. We fell out of the bull channel, so now we have that as resistance. And also this moving average, the 20-period moving average, the 20-day, was support for us. We broke down through it, full candle on strong volume. That's another thing that signals that we could possibly sell a little bit more today. So moving on from, there's a few more things, by the way. RSI near 50 as well. That's another thing that could help us bounce. Crossing down below 50 is bearish. All right, IWM. This one, and I know that there's a lot here. I'll try to keep it unpacked for you in nice little neat pieces. Today, significant selling pressure with this gravestone doji, and we could possibly see a little bit more selling until that settles. We have this trend line right through here. Let me zoom there. There we go. Trend line support from what we had in this rising wedge pattern popping out of the top of that's actually a bullish thing, even though it is a bearish reversal pattern. And if you break the bottom trend line, we do have a gap to be filled, and that gap goes from about 203 to 206. So are we going to go straight up? Are we going to break it, make it through this historic resistance? And are we going to see this all-time high up through this breakout area at the top up to 244? And I'm going to say, I think so, yes, eventually. I think that eventually would happen in this way, that we find out where the top is here, probably not through 229 to 234, although it could happen. We'll have to find where support happens for us for our next launching point, because at this point in time, we're pretty much overdone, overbought on a daily basis, and we had a strong volume move down on this one. And so the bulls tried to push up the price, and they just couldn't help out. They got tired after all this running. So I think that between now and the election, we have probably a pretty significant sell coming to the markets in general. Seeing a little bit of rattling today, and that honestly, especially with the semiconductors, it can help broaden these plays a little bit. We're seeing moves into financial, energy, utilities. I believe healthcare was another one. So as we see that broadening happening, that could most definitely flow to small caps. But I think there's going to be probably entire market trouble at some point in time, especially as the rate cuts come along. That between now and the election, sell down a little bit more. Rate cuts happen, and that is a bullish thing, although it depends on how those rate cuts happen, why those rate cuts happen, unemployment rate, lots of macro reasons that are out there. But I do believe that when the dust settles and wherever we find bottom with the small caps, that next run that we make from whatever new bottom that we create during that time, I think that is when the strength to the Russell 2000 stocks really take off and then come back and retest that all-time high that we saw going all the way back. I believe it was November of 2021. So we want to be on the lookout for that and see where we find support for IWM. Great run though, excellent run from where we're at. We actually gapped up from about 204 up to 24, so about a 12% run in a very short time frame. That was wonderful. Let's move on to Nvidia, because I know this is the one that you've been waiting for. I had some technicals. They are here. There we go. And I know it's a bit of a mess. I have a big screen that I record on. And what in the world am I seeing when I look at this? Well, we have this trend line resistance right here, and breaking this gap to be filled from 122 to 125. We could see a bounce. I don't know if we get that high, but if we do, let me go to the hourly chart to show this to you. If we do happen to get a bounce that puts us in there, you can see that there's room over the next trading day or two for us to get back into that zone and start to fill that gap, pick up some of the orders, hit resistance, and then perhaps sell back down. We have some pretty decent volume on this sell, and you can see it was significantly overdone on an hourly basis. Well, what else am I seeing? Let's go back to the daily chart. We'll break this down a little bit more for you. There we go. By the way, I update my technicals daily at my Discord. Like I said, link down in the description, along with my buys and sells. Toss that up. There we go. So what do we have here? Well, we bounced off the 50-day EMA. The SMA is down here at about 115, which is also in that zone in between these yellow lines is where we find buying pressure for Nvidia stock. So bouncing off that 50 EMA can be a very bullish thing, although I will once again reiterate that the macroeconomic things, geopolitical things are actually very legitimate concerns. And I think we were overdue for a de-risking of Nvidia. I am a long-term investor. I hold positions directly in my portfolio. And so this is one. I did a little bit more dollar cost averaging today. I'm going to do it slowly, especially while we're up at these valuations. If we drop down to the double digits, I think that starts to set up the buy zones. I don't know that we get there. If we break down through this buying pressure down below the 50-day, we can get caught at 105 to 108. Down below that's like 100 as a psychological support. Below that, 95. And below that, if the market really does something terrible, 75 I think is like the ultimate load zone for myself. I can only speak for myself. I can't speak for you. None of this is financial advice, but I will give my take. And like I said, you can do with it what you will. Count it as part of your due diligence, and you also want to consider other sources that are out there as well. So we could take a bounce today after such a drop. We dropped over 6.5% today for Nvidia. In the near term, we got to watch this trend line resistance. We got to watch this support, make sure that's holding out. And like I said about the volumes, today's volume above average, that's this blue line is a 20-period simple moving average for the volumes. And you can see we had much stronger volumes back in here when it was a little bit cheaper, but some of those volumes are still starting to die out. The RSI itself on a daily basis has crossed below 50, which is a bearish thing, but overall we're still above the 50, above the 200. So we could have these very rapid drawdowns, and then we could also have a very rapid recovery on top of it. So maybe once this fear passes, that things starts to settle. Maybe some of this is overdone, and we find some levity coming back into semiconductors and into the Qs, at least in the very near term, such as tomorrow, Friday. I think that we have a little bit of a bounce coming our way from that. Tesla, I just deleted my technicals on this because my chart it started to become so crowded after adding all the different thoughts and ideas that I had to get rid of them. But we are seeing a bit of a consolidation pattern happening here. And I do think that by earnings, which is on Tuesday of next week, we could find ourselves down at 231 or up at 271. So that $40 range, and we're just south of the middle of that consolidation pattern that we find ourselves on. And if we look at this on an hourly basis, we can see a little bit better the sort of chart that we're dealing with here. I'll move that down a little bit. When you jump time frames, you have to adjust sometimes your trend lines a little bit so you can see them better. So we have room. We can bounce a little bit to the upside on this. If we break down through the bottom, that's a bearish thing. I'll watch for the retest off the trend line. And then after it bonks its head, then we're looking down for about 230, 232. If it breaks out the top of this thing, then I think that we're looking for 271. And that can happen between now and earnings. Whatever does happen, maybe we do continue to trade sideways leading up to earnings. Maybe we don't. But whatever ends up happening, I do think that that earnings, wherever we are before earnings to wherever we are after earnings, is not the same place. I think that they're going to be probably wildly different. I think we're either going to get wildly bullish results from the earnings, or we're going to get wildly bearish results from the earnings, at least as far as the stock reaction to the earnings that take place on Tuesday the 23rd in the after hours. Getting back to the charts, let's wrap it up with Sofi. Let me zoom out here so you can see we were on a descending wedge pattern, which is a bullish reversal pattern. Broke out on significant volume here to the upside. You can see it's above the this blue trend line that we have here. So excellent volume. We got volume confirmation, broke to the upside, had some options on this. I definitely have stocks on this one as I'm a long-term holder of Sofi as well. We're up above the 50 and the 200. We could see a golden cross moment coming if we're able to see that price go to the upside. Their earnings are on July the 30th, and I have some very aggressive, very near-term options to see if we can push in the next 2 days significantly above this historic resistance that you have, that 1, 2, 3 different times we've resisted there, and today's a 4th time that we got rejected right at that trend line. And let me see, the high price today was $791, and so back here, if we go to this touch, $790, $794, and then this one was $795. So getting up to $8 per share is something that we haven't seen since the 4th of March when we started this sell moving downward. And as we start to move into financials, based on how right now the odds are for the Republican candidacy for president, things are shifting over to financials. Sofi's in that space as a fintech, and this is one that we could potentially see a further breakout coming to this. And like I said, those very aggressive options, their expiration is Friday. So either they do move and I probably make significant cash off of them, or they don't move and I lose the entire investment. I kept the capital allocation to it very small because it is so risky that if I am going to put out a risk like that, it's sort of a yeehaw cowboy kind of move. It's one that I'm not going to bet the boat on in the process. So last thing I want to share with you is TMF. And when we look at TMF, we'll get to the inverse head and shoulder thing, but we might have a golden cross moment coming. Here's the 50-day. Let me get rid of the Bollinger Bands for a moment. Here's the 50-day, this light blue line. Here's the 200-day right here. And as we start to see a little bit more volatility come to the stock market, a little bit more risk, we might see a little bit more of a move to safety for TMF, for the longer term treasuries, especially as rate cuts start to get anticipated. This could front run that. So I do have an options position in this as well. I think August the 16th is my expiration date on that, and I think I did it for a $50 strike. So there, I shared that with you. It is available over at the Patreon. Sign up for that and hop over to the Discord and see the buys and sells. So about this inverse head and shoulders that you might be spying right here in this whole neckline business, let's drop down to the hourly chart so you can actually see what I'm seeing there. So right there it is. There's your inverse head and shoulders. Shoulder, there's the head on that one. It is not confirmed until we break above the neckline. So right now it's a potential inverse head and shoulders. If we are able to break up above that, we have room up to about $54 per share for TMF in the near term. And that's what I'm banking on. That should return very handsomely to me. A 2x potential, I'll say, on that option at a minimum for intrinsic value if we make it up there, plus the time value and volatility on top of it. So for TMF, in the near term, it looks like we might have enough momentum there to push up through that. Sofi, we'll see if it breaks back over $8. I'm looking for $8.50 would be absolutely astounding for the investment that I have in the near term options. Like I said, super aggressive. Certainly not that I can give financial advice, but like it is like not for the faint of heart. It's like a white knuckle hodl kind of situation when you do something like that. And I also did that for some of the near term options for a long hedge that we take that bounce tomorrow. Once again, small amount of capital because it is such a cavalier type play. And I'll say my short hedges paid off very handsomely, took advantage of that drop that we saw today, really protected my portfolio from losing. I actually cashed in on a lot of them. Teladoc was another one. Pfizer, I think, was another one that I sold today. 78% on Teladoc, also 47, I think, percent was another one that I sold on Teladoc in percentage terms. Lots of winners today. It's a pretty good day. So guys, thank you very much for watching. I really do appreciate it. Let me know what you think down in the comments. I'd love to hear from you every day. I'll keep on coming back, keep on reading those comments, keep them coming. Words of encouragement, questions that you have, stocks you want to hear about, whatever it is, just let me know. And if you guys want more of my ideas, you want to see more of the technicals that I have to share, more of my buys and sells and the results that take place, you can do so by using the link down in the description for the Patreon. And then also down in that description, you'll find the link for a technical analysis trading course. If you learn to do technical analysis like I do and learn to really bring power to your portfolio through the power of technical analysis, you can do so by clicking that link down in the description. Thank you very much for watching, guys. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and I'll see you in the next video.